Earlier this month, Amazon went through a 20-to-1 stock split, taking the value of the stock from almost $4,000 to around $100 today. Now, this is a hot topic. So in today's recording, I'm going to switch the charts and we're going to do a deep dive into the performance of the stock and look more closely at this stock split and see what this means for us as investors. So if you like today's video, guys, don't forget to like, subscribe, hit the bell notification. My name is Zahir Anwari. I'm a co-founder of SublimeTrading.io, where we've helped hundreds of private investors over the past 10 plus years learn to profit from the trends in the market through our simple to learn methodology. I'm also a contributor to a number of publications, including Benzinga.com, and I'm regularly invited to guest speak on how everyday people can supercharge the performance of their portfolio with a particular focus on the next 3 to 5 years. So let's switch over to the charts. Okay, so this is a typical 3-screen setup of mine. If you are a regular visitor to our channel, you'll be familiar with this setup. If you're new to our channel, welcome. I'll break this down for you. In the top left corner, we have the monthly time frame. In the top right corner, we have the weekly time frame. And down here across the bottom, we have the daily time frame. Here at Sublime Trading, we are trend followers. We like to look for the big moves in the market, hence why we use the higher time frames. It ultimately means doing less work for far more profit, particularly when you learn to not just catch trends, but when you learn to compound, because compounding really is the secret sauce to growing an account efficiently and with minimum time in the market. Okay, now just a little word on stock splits. Why do stock splits happen? Well, ultimately, a stock split happens because the company wants to attract more investors, particularly smaller investors who have smaller capitals to invest. That is the whole point of a stock split. You can imagine if a stock is worth, let's say Amazon, $4,000. Not everyone can afford Amazon at $4,000, but at $100, this becomes far more attractive and far more affordable to a lot more people. Hence why companies go through stock splits. It's just there to attract more people. The chart itself doesn't look any different. If you open this chart up at the end of May and then after the stock splits happened, the actual chart would not look any different. The only difference would be the scale on the right hand side, which tells us the price of the stock. So if I just open up the monthly time frame, if you look at the right hand side, we can see that current pre-market at the time of recording this, it's $105. At the end of last month, or pre-stock split, this would have been around $4,000. So that's the only difference. It's just how the scale on the right hand side sits. The actual chart would not look any different. And the way the price itself moves, again, would not be any different, other than if there's more investors getting involved, we may just see price move quicker because there's more money being involved. But other than that, there wouldn't be much difference. Now, also, just to add to this, not everyone is a fan of stock splits. Warren Buffett, for example, he's famous for not being a fan of stock splits, and that's because he believes that the value of a stock should really reflect its intrinsic value. Warren Buffett's company Berkshire Hathaway has two classes of shares, Class A and Class B. Class A are worth $40,000, I believe. Class B are less than $300 now. But here's the thing, the Class B shares went through a 50-to-1 stock split in 2010, and there's always a chance that that stock split could again happen in the future. Now, it's important to note, guys, that if you're a big fan of Warren Buffett, yeah, all good, Warren Buffett's a great man, but he's worth billions. What matters is really your net worth, how your performance, or your portfolio is performing, your future, and ultimately how we as everyday people can take advantage of these potential opportunities. So you really want to take a pinch of salt with what some of these guys out there say, and you really want to look at yourself and focus on how you can potentially profit from any of these stock splits. Not to say that you want to jump in every time a stock split happens. That's also a mistake. We want to look at what the chart is saying. We still want to identify high probability environments, and we then want to take it from there. So let's start with the monthly time frame. That's what we like to do here. Move across to the weekly time frame and then come down to the daily time frame. So if we look at Amazon on the monthly time frame, the monthly time frame is very useful because it gives us a very clear picture of what price is doing. Now, Amazon has been on this huge run, this bull run, performing very, very well for investors. So after every big move in the market, there has to be some kind of correction. And the tech sector in general has really taken a hit since the start of the year. Earlier this week, we looked at Netflix, and Netflix has taken a real hit. So it's the tech sector in general. Amazon is no different. So if we just look at the recent fall in price from the high, which is July 2021, we have seen a fall in price of around 45%. That's a significant drop. The point is now, depending on your approach, is this a good time to be buying into Amazon? Well, let's move across to the weekly time frame. On the weekly time frame, price is below the 200 simple moving average, which is this black line. Now, the 200 simple moving average is a proven indicator of the long-term trend. If price is above the 200 moving average, it has a bullish bias. If price is below the 200 moving average, it has a bearish bias. Looking at where price is right now, it's actually trading below the 200 simple moving average. That means that trend, our trend filter also notice is red. So the trend filter is red and it's below the 200 simple moving average on the weekly time frame. If you come down to the daily time frame, price is below the 200 moving average, the 50 simple moving average and the 20 simple moving average, and the trend filter is currently alternating between red and grey. Now, the only saving grace at the moment for Amazon is that it's trading directly above $100. $100 is a major level of support. This level here could hold strong and it could force price back to the upside. This could also be an area that really sort of attracts investors. They feel like they're getting a good bang for their buck. They may come in at this point and start pushing price back up again. So looking at the overall performance or the overall stance of the stock at the moment, me personally here at Sublime Trading, this isn't an environment where we would look to start buying into Amazon and into the stock market in general, because the S&P 500 has been dropping. With the S&P 500 dropping, the Nasdaq dropping, the Dow Jones dropping, stocks in general, most stocks are dropping, and a huge percentage of stocks are actually trading below the 200 simple moving average. For us, we like to wait for a little bit more confirmation in the market that there is a recovery in the market before we actually start buying. On the monthly time frame, if I just go back to a monthly time frame, you can see that there is a strong support level from 2018, which is also coupled with the $100 round number. And if I just expand the chart, you can see that last month, this is where price came. Bulls came in and pushed price back up again. June, the sellers have come in so far strong and they're back at this support level. We could potentially see the buyers come in and push price back up again. When would we be looking to buy into Amazon? Well, at the very earliest, we would want to see price above the 200 moving average on the daily and above the 200 moving average on the weekly. Once price starts moving above the moving averages, that's when we'll have confirmation that the buyers are back in control of the market, and that's when we'll start potentially looking to enter into Amazon. Now, if you're conservative and you want a real confirmation that we are in a bull market, that is when the all-time high is cleared. So once price breaks through this high, which is just short of $190, particularly $200, which is a round number, if we get a break and close above $200, then we know that we are in a full-on recovery, and price could then start pushing towards $300, $400, $500 and beyond. So there is an element of patience here before we get to that level. If you want to be more aggressive, wait for the 200 moving average on the daily, on the weekly and the daily to be broken, and then look for an entry point. If you want to be more conservative, wait for the all-time high. And also, guys, do use the indices as a whole to give you an indication of what the market is doing. So once the S&P 500, the Nasdaq and the Dow Jones also display recovery and bullishness, that will be a clear indicator that you want to start buying into these stocks. For now, you do want to be applying an element of patience. You don't want to get in too early, because you could ultimately end up with a stock that you want to get rid of but you can't, or you may end up with a loss. So for now, apply patience. Okay, I hope you guys enjoyed that. Don't forget to like, subscribe, hit the bell notification. What next, guys? Well, go down to the description below this video, click on the link. The link will open up to this scorecard. Are you ready to skyrocket your stock performance? Take the scorecard, guys. It'll take you less than 2 minutes to complete. Once you complete the scorecard, you'll then also get free 30-day access to the Hot Stocks Vault, where we share with you the top 10 best performing stocks every single week. And not only that, guys, if you like the screen setup that I was doing my analysis on, the 3-screen setup, you also get 30 days free access to that, as well as a community and also a stock of the month video. So a lot of goodies within the Hot Stocks Vault. that will really help you to build a foundation to build from. Because ultimately, guys, you need to have the right stocks in your portfolio to see returns. People often build attachments, unhealthy attachments to stocks that aren't performing, and that's usually based on brand names. You want to put that aside and as an investor have a more neutral approach and move to where the money is, and that's where the stocks are performing the best. And we will share the top 10 with you every single week, saving you thousands of pounds in scanner subscription costs and hours daily and weekly having to find these stocks yourself. See you in the next recording.